Very good morning, traders. Welcome back to my channel, Smart Index Edge. I'm Nalnakshi Swami. Today, I'm going to show you one of the most powerful comparisons in trading, Rolling POC by Algo Alpha. That indicator is available on the Trading View versus the Supertrend indicator. You might have wondered, sometimes super trend fails in sideways markets, or why price keeps bouncing from certain hidden levels. That is where rolling POC comes in, a volume based approach that shows you where the market truly values price. In this video, I'll explain how rolling POC works, how it differs from Supertrend, and how you can combine both for highly accurate trade setups. Stay tuned till the end because I will also reveal a practical trading strategy using both indicators together. This is going to be a game changer for your trading journey. So let us begin, traders. Let me begin the presentation now. The comparison of rolling POC by Algo Alpha versus Supertrend. What I'm going to compare is concepts. You are going to understand the concept behind the Algo Alpha, rolling POC, and comparison and trading strategy. Rolling POC, you must be familiar with the fixed range volume profile. This indicator, rolling POC, it's a moving point of control as the price proceeds. It is very, very helpful in the live market trading, intraday trading. See, the value point of control, if it starts moving, whether it is moving to the upside or the downside, you can make your decisions and you can make a valuable trade also. In this presentation, it compares the rolling point of control by Algo Alpha. This is the indicator. I must thank this person. Really, it is a very good visual representation of Algo Alpha. And I'm using the Supertrend because Algo Alpha, I'm going to explain why Algo Alpha has got certain limitations and Supertrend has got some advantages also. Here we are going to understand the concept of rolling POC, concept of Supertrend, and key differences, trading strategies, advantages and limitations. In concept of rolling POC is point of control. POC is point of control, that is rolling. It rolls with the price derived from the market profile principles. You must be knowing about the market profile, price profile as well as the volume profile. Many people might have used about the volume profile, fixed range volume profile or volume profile. You will be knowing where the most amount of volume is traded and where is the value area high and value area low and the point of control. Represents the price level with highest traded volume within a rolling time window. That means rolling time window means that is the value area at particular time it represents the highest traded volume, rolling POC. If the price starts moving below that in that time window, it indicates that down move, or if it starts moving up, it indicates the up move. Indicates areas of high market interest and fair value. What is the fair value for the that price actually at that period? So helps traders, it is with the time, helps traders identify strong support and resistance zones dynamically, not static support and resistance. These are dynamic support and resistance. It is needed, very much needed for an intraday trader. So, if we are going to trade with static support and support and resistance areas, we tend to make mistakes. That is very, very important. Algo Alpha's version continuously updates the POC. That is the beauty of this. Giving a real time view of value migration. I hope you understood. Algo Alpha's version continuously updates the POC, point of control. It starts shifting, giving a real time view of value migration. So, this is the example of the Algo Alpha. I've applied the Algo Alpha on the Nifty chart, and you can see this is the volume profile on the left side, black thing, and yellow bar is the point of control. At this period, the point of control was there, and on 22nd, it started losing the price started moving away from this point of control value area. You can see value areas are plotted with black boundaries. And this green color is trend indicator. It is coded for trend also, right? And then this is the value area low and value area high. And the point of control, POC, started moving downwards, indicating price is gone, lost its thing, and it is moving downwards. It clearly indicates, you can make out that price is moving down, and you can take your trade accordingly. Quickly, you can see that the point of control started moving down here in this area. So let us see the concept of Supertrend indicator. So many of you are familiar with it, and many of you are using the Supertrend. Sometimes Supertrend becomes it becomes cranky when price moves sideways. It will start plotting upward, downtrend, uptrend, everything. Then at that time, you will not be having clarity to take the position. That is the thing. A trend following indicator based on ATR, that is average true range, that is nothing but volatility, plotted above price in downtrend and below price in uptrend. So when the market is trending straight away downtrend, no problem. Straight away uptrend, no problem. Super trend behaves normally, and it generates buy and sell signals when price crosses this super trend line. Works best in trending markets. Most of the time, market will not trend. It goes sideways. At that time only, the value, everything price will emerge from that area only. There arises the confusion. We will not be making any conclusion. We cannot derive any conclusion where the market is heading, whether it is going to go up or go down, sideways, whether it is accumulating or distributing. We cannot make out. We cannot make out the live market. It is totally impossible. Even though you are a master of price action, even for the professional traders, it is difficult. In hindsight, anybody can tell, oh, like this, it has come down, trend was down, it has broken down. That is not the thing actually. Works best in trending market, but gives false signals in ranging conditions. So, super trend. How many of you might have experienced this in ranging markets? Because most of the time market stays in range, not always trending. Trending will be only few 25 percentage or anything. Most of the time, 75% of the trading days, market will be in a range actually. How many times on an intraday time frame the market trends for an hour and then goes sideways? You might have seen that. In this example, I've used super trend alone and I've highlighted this with elliptical this one. See, the price is going sideways. The super trend is plotting red, green, crisscross. In live market, you cannot make out. You cannot make out because you will take the position, it is the support, and you will enter into, and it will start moving up, definitely. You will decide that here you can see the price has moved above this level. So you will go long keeping the stop loss. And super trend is confusing. It's not giving a proper signals. Here you can see the same thing, super trend. If it is in a trending market, it is beautiful. When it starts going sideways, then only the problem arises. So let us compare what are the differences between the rolling POC versus super trend. Rolling POC focuses on volume concentration. Volume is very, very essential in the market. Volume can change everything. You might have noticed how the big money changed completely the Nifty trend, gapping up from 24,600 to almost to 24,900. You have seen that. So rolling POC focuses on volume concentration. Super trend focuses on price volatility. Rolling POC shows value areas. Value areas are nothing but market areas at that time window where is the market is placed, and you will come to know the boundary, value area high, value area low, and the point of control, high volume nodes. Everything you will come to know in that. Super trend shows directional trend. Rolling POC adapts to both ranging and trending markets. That is the beauty of the rolling POC. What it does, rolling POC adapts to both ranging and trending markets. We need that. While super trend performs best in trends. So, what is the solution for that? We can combine them, both of them, and which can enhance the trade confirmation. So, by combining both rolling POC and super trend, your trading decisions will become sharp. So, this is very essential how you can do that. How you can build a trading strategy with rolling POC. I'm going to explain. Identify the current rolling POC level. At that level, I'm going to show you in the chart also. Look for price acceptance above POC for long trades or rejections below that POC. Suppose price starts rejecting the POC and start trading, you can go for shorts. Use POC shifts to identify trend continuation. If POC starts shifting, it indicates market area is also shifting and the point of control will also shift. So a trend will continue. Trend continuation or reversal you can identify clearly. So combine with volume spikes for stronger signals. You can make out on the left side of the Algo Alpha indicator. The volume spikes will also be there, and that you can make out. Place stops just below or above POC for better risk management. You can place your stops above or below POC and you can trade. This is the trading strategy, you can build it. Here in this example, I am comparing POC with the plain chart. This is on the right side, rolling POC has been applied, whereas the chart without any indicator, what happens? Just let me explain. On the 21st, the market opened gap up and then started lowing low, but retaining the previous day, intraday last hour low. Then it acted as a support and price started moving almost to this level, that is 25,140 or something. Then it started retracing. What do you will think is, definitely all the traders, professionals, they will think it as a strong uptrend, because many times these presentations will be shown, and many times price has moved above that also. This is the gimmicks by the smart money. Sometimes they do like that, sometimes they push the market higher, sometimes they will bring it down. That is where it is the confusion for traders. Live market, definitely what you will do, it has come down, it has pushed up, and it has made a lower low, indicating a W pattern has been marked. From there, market has moved higher. What you will think? Definitely, you will think price will move without the indicator. But here, when after applying the Algo Alpha volume profile rolling POC indicator, you can see the boundary market area has been confined. Here, if you see closely, that value area, market area has shifted downwards here in this area, indicating something is changing. After that, when price started here, this is the trend actually. Rolling POC is coming down, and it is plotted so nicely, the color coded for the area of redness. It is plotting, already plotting. And you can see in this area, it is not very dark. Here you can see, by seeing this, it is coming down, and the area, you have to concentrate on the area, white patches there. If you start observing the things properly, these white patches are not, they are shifting downwards, indicating a trend has already established on the previous day, and the market is an history. You knew that on Friday what happened. It was a huge drop. A single candle drop from 25,080 to 25,022. 68 points in a single candle drop. I am on the 5 minutes chart. The single 5-minute candle dropping 68 points. Okay. So in this way, with the rolling POC, you can make out. Here, closely I have marked how range has been shifted, and the rolling POC, that line like that, it is the rolling POC, it is coming down, and the black top, and these are the value areas and value area low. Even though value area has shifted higher this here, on the downside, same period, value area has shifted down. And here it was a clear indication, it is giving you clear this thing, price is moving down. So you can enter the trade by keeping the stop loss and you can hold the position. One of my viewer from Tirupati, I don't know what made him to take the trade. He took the position on the put option, 25,150 put option overnight, held the position. He made a huge money. Huge money because of his conviction and because of his mindset. That is the only thing he can do it. See, traders should have, we will have indicators, we will have analysis, everything. The final thing comes is the mindset. Mindset of a trader holding the position with conviction. That is very, very important because many traders fail to trade successfully because of their mindset. Many professional traders also, they do analyze the things properly, but they cannot hold the position. They will not be successful traders because of the psychology and the mindset. So mindset is very, very important. See, these things, these indicators will boost your mindset and your psychology to hold the position. If you start seeing the things properly and analyze the things properly. In the next trade, trading strategy with the super trend. Use super trend to determine trend direction. Enter long when prices closes above the super trend line, short when below. Simple. That is when the market is trending, no problem. Super trend will be super. Your trades will be super. It will not be always like that. Avoid trades in sideways markets. So it is difficult. I can say avoid trades in sideways market. It is difficult to identify the sideways market when the market is in live. Only with experience you can identify the sideways markets. You need to see the price action very carefully with careful observation, constant chart reading. You can understand market is going sideways. Otherwise, you need some objective tools for identification. Then combine with rolling POC to validate breakdown or breakout. So if you combine that, if you combine Supertrend with rolling POC, you can avoid all these things. Confusion you can avoid. Here in this chart, I am just applying the Supertrend. You are not able to make out, say when it has plotted sell, then only you will make out that will be plotted only later, not here. You can apply and playback mode, you can see this sell position will not come. Only when it comes here, it shifts its momentum. When it breaks below this only, so you cannot identify very early. Whereas here, I am just applied the Algo Alpha rolling POC volume profile. It has indicated you the POC price has rejected from this POC at that time frame window and started moving down. You could have taken position and you could have held the position and it has plotted red line. Trend has been, these are the beautiful thing which has been coded by Algo Alpha. And the trend with green, trend with red is also plotted. Visually, you will be comfortable. Visually, if you are comfortable, it will boost your confidence. That is most important for a mind psychology. Mind, it needs something. Somebody is staying with me. You will have an idea, you will have comfort that somebody is, I am jumping into the trade and somebody is staying with me as a comfort zone. Okay. Combining rolling POC and Supertrend. Trade only when Supertrend shows trend direction and price sustains above or below POC. Rolling POC provides key levels. You will come to know the key levels. Supertrend also, combining with them, confirms momentum. So combining both, like both two doctors with you. This combination reduces false signals and improves accuracy. Example, long entry when price is above Supertrend and also above rolling POC. Double entry. You don't take the trade when there is disparity. Here, I have taken the example of 24,150 put option. See, everybody, we don't see underlying, we don't analyze the underlying Nifty, but we are taking the trade on the options. Most of the traders, retail traders, are option buyers, not option sellers. Option writing because it involves risk overnight as well as intraday. You can utilize the POC for writing also, as well as what it does is it is a retail traders with little money opt for option buying for huge gains, profits. But in that process, they tend to make mistake and lose money. So with this combination of volume profile as well as the super trend, you can be in the proper trade. In this example, you can see previous day it was rolling POC value, it did not show anything. But later you can see around 2 p.m. Like that, in the underlying it was showing trend shift. There was no drastic movement here, but the trend line has plotted. But only the people who can dare, like Ramesh, can take the position overnight. And he has taken the position overnight and he ended up with the huge, this thing, profit. See, he was able to make huge profit. See how the market moved and the value area, here value area has shifted, started moving higher. You can see how it is moving higher. And the rolling POC is also moving higher. And the trend is plotting. The trend has been plotted green. Rolling POC you can see here. That is also green. And this, it started making a red line while closing. That is an indication you close your trade. If you are a wise person, you can close your trade. See, value area still it is. Once it's, suppose market up, what Gift Nifty is showing is, it is showing 120 points gap up. Then this uh, put option will lose money. It will start trading lower. So advantages, what are the advantages and limitations? Advantages in the rolling POC is you will get a strong level. And another thing is it adapts to market structure. That is very, very important because the price moves along with the time. So you will have an idea when where the price can move along with the time. That is very important. Super trend, it is simple and effective in trends. Limitations is rolling POC requires understanding of volume profile. You need an understanding of volume profile. If there are no volume, very less profile, you cannot take the trade. That is the limitation. Otherwise, everything will be clear. Super trend whipsaws in choppy markets. That is the problem with the super trend. Best results will be achieved when they are used together. You can achieve best results when they are used together. So this is a graphic image representing POC versus Supertrend. Rolling POC as volume as its weapon and Supertrend has got trend volatility. So while concluding, rolling POC and Supertrend serve different purpose. But though they serve different purpose, you can combine them for our advantage. POC shows where the market finds value. Supertrend shows trend direction. Combining them provides a balanced approach. You need a balanced approach to trading by aligning value with the momentum. By aligning value with the momentum. I conclude this with this. So, traders, try to apply this indicator which is available. Type in the indicator section, rolling POC, you will get by Algo Alpha, you apply on the chart and apply Supertrend on the chart and combine with that and make your trading decisions and follow some certain rules what I have explained and understand the concept behind both the things and trade properly, trade wisely. Thank you very much, friends. Nalnakshi Swami signing off.